The options market is signaling a major red flag this week. We're going to talk about dealer levels going into Jackson Hole, as well as some other things, possibly another trade idea as well. It is Sunday night, August 17th, 2025. And if you guys like the content, the video would love to get a thumbs up from you. I would too. Also, I know you're going to love the trading room in our Discord, as well as our swing trading alert service. Come find me on carnivoretrades.com for that as well. Let's get into it here this week. So we had a new all-time closing high last week, and with the Dow as well, which we talked about, that would happen. I said that if this market's going to have any sort of pullback, it's not going to happen after the Dow makes a new all-time high, and we finally did do that. Right now, I want to preface by saying here, this week here, there's a lot going on, and there's definitely some changes in dealer positioning, things that I have not seen in a while. But I want to preface this because I know that the thought here will be, well, Aaron, Powell's not going to do anything, or he's not going to do this, or he's going to do that, or this is going to happen, or Trump's going to say this. Look, I'm not here to speculate. I don't know what the Fed chairman is going to do. I don't know what's going on in his head. I don't know what Trump and Zelensky are going to do. They're talking right now. Putin's talking right now. And Trump promised news. I did talk about the possibility of a peace deal last week. The market's sniffing that out. We talked about 6,500 SPY, not SPY 650, but 6,500, and we got to 6481 this week without that news. So nonetheless, again, the point is these dealer levels work. It doesn't matter what the reason is to get us there. We didn't have a reason last week. We just went up, right? So I'm not here to speculate whether or not this, that, or the other thing happens. But what we do know is that there are some changes here. Now, I want to talk about really quickly. Again, if things don't materialize here towards the end of the week, then kind of like this whole. I mean, the general consensus right now is we can just continue melting higher. But we've talked about this. I've talked about it. There's just a giant, and it's just through several months out. 6,500. There's a ton of calls up there, major call wall. So the bottom line is we know this. Volatility event Friday, and there's a possibility of an opening here where bears can make a move. One, we're going to have a fresh VIX cycle on Wednesday. Two, dealer positioning is starting to change here, and that's the big driver. And we have, I have a library of videos on reading GEX and whatnot. If you guys want to check those out, that's another Carnivore Trade School playlist, among other things. But in any case, we have some downside hedges here for next Friday. This is for the 22nd. That's not out of the ordinary, right? So it's totally normal to have some out of the money put exposure on a volatility event day. And you can see there's tails down there too. So that's not really what bothers me. What bothers me is that if we go across all expirations on the spider, we're seeing something I haven't seen in a long time, which is that dealers are long on the put side now. Versus previously they were just selling put, selling put, selling put. Market's buying puts, buying puts, buying puts. That is flipped now, and the market is all in here. So I'm not even that concerned with the gamma to the downside, which it's definitely there. And you do have, still net positivity, but the thing is, I see a lot of people just talk about like, oh, well, deltas are positive still. So, throughout this period of time, so it doesn't matter. It'll just be supported. That's not necessarily true. If volatility is opened up, dealers will just hedge right down. They won't worry about those delta levels or those net levels. But you can see here, this is the first time in a while that I've seen dealers actually go long on the put side. And again, this isn't just for a single expiration. This is across all. So that is a little bit of concern here. It's definitely a change from what we've seen, and it's not something that we see very often here. So definitely I know it's hard to read here because they got those half strikes kind of messing with things, but 620, and then the big one down here, the big tail is, I believe, 610. So there is some risk priced in here moving forward. This was not really the case a week or so ago, and now we want to make it a little bit even, an even more bearish look. Here's the Qs. So it is much, much, much bigger here. Market is super short puts. right? And the dealers are on the other side of that. I mean, I would say right now, your big level for the Qs here is going to be right there at that 565 or 570. So you'll be a negative gamma, and that will damage a lot of positioning. Now, Powell could do nothing. He could do something. He could do this. He could do that. Maybe Powell cuts rates to 0 like Besant wants. Okay, that's not going to happen, right? But the point is, like I said a minute ago, volatility event, risk, right? We have those two things lined up. Previously, it was like this: volatility event, the Fed or whatever the other event was, and dealers were supportive. Like, that matters, right? That really matters, right? That's why you see those zombie bids in the market every time that there's a PPI, right? 5 sigma beat, and what do we do? Dip 10 points and then pump right back up on the futures. These things happen for a reason. Have you ever wondered why the market just ignorantly goes up every day for periods of time? That is a big part of the reasoning. So we're seeing these appetite for the market to have downside hedges disappear. The other concern here for me would be the consensus right now is that everybody wants to buy the dip. Everybody's starved for a dip, and I think if we get a dip and everybody does buy it, it could be a situation like here. Now, I don't think we're going to have anything. We're not going down 25%, but you could get maybe a lower high and a secondary leg down after that. These are just projections here. We're just putting that out there and weighing out scenarios. Now, if nothing happens, then we can consolidate sideways, and then we could maybe chew through that call wall at 65, and then you can get up to 66 or whatever Tom Lee or David Hunter is talking about to melt up scenario after that. So again, from a technical standpoint, no problems here. Above all the moving averages, trend is up. You're trying to put a bull flag in on the daily, which has happened before, and we've failed on those before. So it does fail sometimes, especially when you're stretched. But no technical problems, right? We closed above the engulfing reversal, right? So there's no technical reason here, but there is a trap door. So that is what the concern would be to me right here, and it's not something that I would talk about lightly. This is probably the most bearish I've sounded in since the end of Feb, right here. So, some things to consider there. One idea I do have here is actually on the long side, though, believe it or not. This would just be a bounce, and we'll see what it does Sunday night, but CoreWeave. So this is a very interesting stock here. Up 30% for the week in the first 2 days, and basically closed at 150, and 2 days later is at 100, and opened at 95 Friday morning. I don't know. Is it a coincidence that we closed 3 pennies below 100 for the August expiry? I don't know. Maybe not. They were willing to knock this down 50%. Now I know it's a high beta stock, but knocked it down 50% in 2 days to do that. I think it's a little stretch to the downside, and if you guys are in the trading room watching, you guys know exactly the type of setup I'm looking at here. But yeah, gapping below the low and then not following through, that could present a little bit of a squeeze opportunity. Let's take a look at this Friday, and we'll just simplify it here. We don't need the whole look, but I am interested to see how this opens. Now this could, I have to see how it opens tomorrow, but you can see the net hedging is these are all OTM, right? This is 150, right? We're at $100. Why is that? Why are we still net positive there? That is suspicious. And we're seeing, call volume on Friday too for this expiry. So if nothing crazy happens, we get below 100, then yeah, it could get really ugly really quick. But I don't think that's going to happen. So maybe a little rebound play, something to keep an eye on for Monday. I'll be certainly scouting it. This is not a license to buy. It's not financial advice. I'm not telling you, I'm not predicting Corey's going to do anything. I just find it interesting and possibly worth a look. So that's something else that we're looking at going into the end of the week. Lastly, to kind of wrap up here, again, to add on before, if we don't get any sort of disruption here with the bullish flows or the bullish price action, then I think you still get that rotation into other sectors here. IWM still has, I mean, as long as it's holding 225, and by the way, Stanley Druckenmiller, now 13F filing, has IWM calls. So this is a trade I've been talking about for weeks and weeks and weeks, just like Apple, just like the Dow, being catch-up plays, and they were, even UNH. But that's a totally another story there. But IWM here, as long as it's holding 225, this can still, I mean, there's still dealer tails at 235 and 240. They're farther out, but they're definitely there. Now, you know, if we get a sweeping, you know, decline, that's not going to happen. But I would say, again, still from a risk reward standpoint, right, I can't buy the Qs here, but I can buy something that has a nice base and it's putting in a bull pattern here. I'm not going to buy it. I already had a position. I trimmed it down, taken profits. So that's really all I'm doing right now. But that would be kind of your bull scenario here, is I would say sideways-ish, maybe even into the end of the month. And then you could get a move up into September if too many people are looking for a decline here. But I will say, again, there is now a trap door that's starting to open up probably towards the later part of this week. Something to keep in moving forward. Anyways, you guys take care. Come find me on carnivoretrades.com. Don't forget to take a look at some of those videos if you're interested in learning a little bit more about cam exposure, things of that nature, or just technical analysis. That's right on the playlist there. You guys take care. I'll see you guys next week.